New all-time highs for the market. The S&P 500 closing above 577, trading a little lower here in after hours, but still a really nice ramp in the morning right into these levels that we've been talking about. The 575 level and the 580 level is the next major target that we're going to be watching. Our gamma exposure levels have been key in understanding where the market could potentially go if we were to break out of this zone that we've been trading in for the last 2 weeks, or if we were going to break down. Ultimately, our bias coming into this week that we would see a breakout of this zone between the 565 and 572 range. And here we are trading right between 577 and 578. So Sean, I know there's a lot of bears out there, and we may have been in the minority expecting a breakout of this range, but here we are, all-time highs. Why don't you talk a little bit about your views on where we go from here?
Sounds good, Anthony. Yesterday we pointed out that S&P getting above the whole moving average was a bullish sign, and sure enough, closing above that pink line here basically helped us to ignite this big rally today. And there was even time to position for it after the open, which is a nice gift from the market. Anyway, it looks like the Keltners give room up to about the 58.25 range. I would say, once we get to that resistance level, I'm going to probably be looking for some sort of a pullback, broadly speaking, but, it's in the context of this thing just continuing to march higher. I also wanted to point out that Gamma's really been giving us in the morning some valid targets for where the market's headed. So one thing I wanted to point out is that intraday zero data expiration or zero DTE GEX has been really helpful for us in our Discord room. We've been pointing out these targets that we're seeing early in the morning. And so today, we mentioned this 5775, 5780 area. And sure enough, we got there. And this was, 9:25 in the morning. So gave us plenty of time to get ready for that as well. And furthermore, once the S&P reached that point, we pointed out that, okay, we don't see gamma growing on the S&P beyond the 5775, 5780 area. However, QQQ still had upside with the 493 to 495 area. So it even allowed us to pivot, amongst the indices to finding the one that still had some meat on the bone, as I said here, as the saying goes.
Yeah, thanks, Sean. I just want to piggyback off of something you brought up with the technicals on the chart you were showing. You were mentioning technical resistance up here, which would correlate to around 580 on the SPY. This is actually right smack in the middle of our dealer cluster zone. One thing that I want to point out about this chart, we're looking at gamma exposure here at the 577 strike. A lot of this gamma that we're seeing in this blue bar is going to roll off today. Most of this is zero DTEs, about almost $1 billion in gamma exposure. Most of that's going to roll off today. And so I'm expecting, especially with any kind of push higher tomorrow morning, I would be expecting this dealer cluster zone to shift higher. So potentially between the 580 and 585 zone. One thing that I'll be watching for are these two gamma exposure levels at the 580 and the 585 level to see how they're growing, how volume is coming in. These are things we look for on an intraday basis. It is possible, though, that we could see some resistance both from a gamma exposure perspective with dealers selling the underlying shares, and also from a technical perspective, just market participants just taking profits because we're here at all-time highs in kind of a precarious October election season time period.
Yeah, Anthony, another thing that I wanted to look at was the VIX, which the gamma has not really shifted that much on the VIX. We still see these cluster zones in generally the same areas as they have been, but we haven't seen volume at higher strikes like we did before the VIX spike occurred back in September, end of September. So that said, And we'll look at a couple of things on the chart too, but I'm just wondering if volatility needs to come back to where the VIX is at 19 again, which would be, there's almost no gamma there, but that's the zero gamma line. So that'd be a very natural kind of battleground spot to see this thing if it does pull back. We've been saying that the top of the 2-hour Keltner channel is a spot where we typically would expect a pullback with the VIX, and we've gotten that. We're kind of in this general area now where we're just below the middle Keltner. We're also just below the whole moving average. We did reach the 20 zone, and it also allows for a move down to 19. So this kind of matches with what we were seeing with the activity today and the gamma structure on the VIX.
Yeah, speaking of volatility, there is definitely volatility in the air globally speaking. China's CSI, that's the mainland index for the Chinese stock market, plunged 7% yesterday. After this really insane 10-day rally, basically gave a big chunk of it back yesterday. But even if we consider, Hong Kong's Hang Seng index, that also tumbled 1.7%. So there's a lot of volatility going on in global markets. Here we are hitting all-time highs in the US. But there is a lot of volatility in the world, a lot of uncertainty with geopolitics. So keep your eye on these global events and, just factor that into your risk analysis. So pivoting from that thought process, let's just take a look at a stock like Alibaba. Alibaba trading around the 107, 108 range. This is a really good illustration of the run-up that has occurred in the Chinese stock market. Alibaba going from, the low 90s all the way up to the 115 level in a matter of days. And this is the case for a lot of the Chinese stock market. Here's that huge drop the other day, right? And if you look at this from a gamma perspective, this drop stopped right at the zero gamma level, which is also right at the lower dealer cluster zone. And so it doesn't surprise me that we are seeing some support in here, basically just because the options market is at the lower end of the structure here when it comes to gamma exposure. Today, we're seeing quite a bit of volume coming in at the 110, 115, and 120 strikes here on BABA. So this could be a interesting point from a risk reward perspective, to go long in some names like BABA or Baidu, especially based on the gamma exposure data. With tight stop losses, you can set your stop losses here between the 110 and 105 range. And if there is any kind of snapback bounce, you could bounce, up to the 115, maybe even the 120 back to the upside if this trend continues. Technically, the Chinese markets are still in an uptrend. I think this is a really interesting play. It's something that we haven't really been trading recently, but I'm going to start taking a look at it. Because with these kind of drops comes really great opportunities.
Yeah, interesting idea, Anthony. I wanted to look at GDX, which doesn't always move exactly with gold, but you can see we have this uptrend that's been very consistent at pivoting, from these levels. And even though we've had gap downs each day, the last two candles have been greens. So, there's some buying going on during the cash session. But we're kind of at this, the bottom of this trend line. If I'm using strictly the Keltners, I'd look at it and say, well, maybe there's a chance that it continues declining, breaks that trend line, and then, meets this bottom channel at some point. But we're going to take a look at gamma. So if we go over to our gamma dashboard, you see we have positive gamma. We've got GEX intensity gauge showing a decent positive gamma. We have this large dealer cluster at 40. We had volume today that was also very high at that 40 level on a comparative basis. So GDX to 40 looks like a pretty good bet based on this view.
Yeah, commodities and metals in particular have been really interesting as of late. Really great stuff there, Sean. Next, I want to talk about Nvidia. We mentioned this in a couple of videos last week, how we were watching the 130 strike. Well, that broke yesterday, broke through that major level. We've seen gamma exposure growing at the 135 and the 140 strikes. We're also today seeing a lot of volume coming in at the 135 and 140 strikes as well. So despite, this 15% run up that we've had over the last week or two, It looks to me like market participants are positioning for further upside. This could take another week or two to play out, but it looks like the gamma exposure is growing up here. This dealer cluster zone may give a little bit of a pause. We saw a little bit of a pause here today in the trading action. That's natural as dealers unload shares of the underlying to hedge their positions. However, as a lot of that positioning is worked through and more market participants come into the market going long Nvidia, this will naturally push this dealer cluster zone up here. And so when we see these gamma exposure levels growing here at higher strike prices, that is our indication that market participants are positioning not only in the options market, but most likely in the equity markets as well for higher moves. So that's something I want to continue watching. We've been playing semiconductors the last couple of weeks. We actually have a position on in AMD as well. And so that's something we'll be talking about in our community Discord. By the way, if you guys are interested in following us in our community Discord, I'll put a link in the description below. Come on in and say hi. We've got a lot of great traders talking about market analysis and trades that they are doing every single day of the week. Also, don't forget, if you want access to our gamma exposure dashboard and our option flow analytics, head over to geeksoffinance.com. You can become a member. I'll put a link down in the description below. Thanks so much, everybody, for watching, and we'll see you guys in the next video.